right. Good morning. Good morning. Hopefully you guys can see and hear, and we're gonna stop there. How's everyone doing this morning? Ooh, everyone's piling in. Can you guys see my screen? I hope. All right. What up, Duco? All right, so let me just take a look at the pre-market runners. We're not going to jump into anything just yet, but I want to see kind of what's cooking for the day. I haven't looked at the market yet, so I'm right there with you guys. Get quite a few of the handsomest folks on the planet in here. Ooh, that's going to halt. Proc. Pro Kidney. Anyone trade this one before? Let's see what we got here. We got some potential on this one, but it's probably not going to be to the upside. So we'll see what this one does. So stuff like this I kind of like myself, but it's very risky biscuits because you know, the rejection potential there is huge. So I do kind of like this one for a quick pop though, but I don't think I want to trade it. I'm just going to watch it. So this is an opportunity for us just to look at those, you know, just the quick pops. That's a 6% candle right there. We would have just been in and out. I'm not going to trade stuff like that in this kind of morning. So we'll wait. We'll see. Maybe I'll come back to it. I just, we got about 12 minutes until the market open. Hey, what's up, JDG? How's it going? Happy birthday. V Michelle, what is up? What's up? Happy Tuesday. Yes. Yes, all day. Half the night. We're just kind of seeing what's cooking in the market. We're looking around. We're seeing who's getting the volume, right? That's what matters the most. So let's go ahead and take a little bit of an inventory here. So I like stuff like this. It's got, you know, it's got a lot of a high market cap. It's 360 million or 359.50. And you know, this one had plenty of potential yesterday, right? So we had a good opportunity on that one yesterday. Sometimes we get continuation day 2, day 3. I just don't like this. It's just a little, it's a little messy, right? It's a little diluted. We don't really like that too much with these fast movers on day 2. The things that we do like are things like proc, you know, obviously. So I think I'm going to come back to this one. I like NDRA. I've traded the hell out of that one, but it needs volume. So this is one where when the volume's there, it's great, and you get big moves like this, boop, boop, boop. And when it's not, you get these slower trickles to the downside. So we don't want to play around with that today. All right. So it looks like we're going for a retest here on proc. So let me go ahead and get my position potentially ready. Now it's obviously risky biscuits here. It's high risk, so we're going to kind of wait and see. We're going to wait for a buy up here. There's a little heartbeat. Now I don't like that it's kind of at the open of the candle, so I'm going to wait a little bit. Yeah, JWAG, there are size. I'm sure it's super high. That just means it's got a lot of strength. That doesn't necessarily mean it's going to reverse, but the likelihood is higher. So we have to be mindful of that. It just means there's a lot of strength. So I'm going to go ahead and wait just a second here on this one. So I don't quite see the markers that I'm looking for. Shut up, alarm. So for this, obviously, because it's high risk, we don't want to just jump into a new high and then have it shoot all the way down. So we're just going to wait. And this is why we wait, right? We want to wait and make sure that the volume is going in the direction we want. So right now we're seeing an absence of volume. It's ebbing off, so we don't want to jump in and get hurt. How's everyone's morning, by the way? Uh-oh. You can't hear me on the recording? Let's look into that. Hey, my microphone should be working. I see the meter going up and down. All right, sorry guys. Let me just check my YouTube real quick. Someone saying they can't hear me on there. Nope, I can hear it. Okay. Sorry about that. Yeah, Duco, this is Proc. I'm just waiting. I'm not jumping into this one just yet. Sorry, let me catch up on the chat. You guys just blew the chat up. I love it. Hey, switch over to YouTube for 5 seconds. What's up, Stickman? Fergie? Yeah, I just looked at Wolf a little bit ago. You kept a couple from yesterday with some profits. Good stuff. Thank you, JWAG. Morning has been amazing. Tell me about it. What happened this morning? What made it elaborate? Thanks for letting me know you guys can hear me. Here's Mac App Def. What's going on, buddy? I'm a little bit congested today, so sorry about that. And SSK Ether is now Ethan G629. Hell yeah. Ethang. So I'm just kind of watching Proc here real quick. It's getting ready, I think. I'd like to see a break over a candle or something that indicates strength rather than a weakness. We have about 7.5 minutes to market open. So I don't just want to, I don't want to just focus on this one, and I don't want to have to, you know, I don't want to focus, sorry, focus. I don't know why I said that like a Scotsman. I don't want to just look at this one area here unless we see that strength. So if we see the strength, like how it's stalling at the top of these candles here, that's a good sign. But it needs to maintain that and then push up. It needs to, like if it stalls up here and then pops back down, that's not good. So I need it to stall at the top of the candle and then break to the upside. That's a nice little heartbeat on that. I'm going to go ahead and get in right here. If I can get filled, I might not be able to. And if this just goes without me, I'll just cancel this order. If it doesn't come back down. Yeah, just go ahead and cancel that. We can always get back in at a later time. There's no point in trying to force that. You have a few, Joe Hagg's got a few puts on Wolf. Yeah. Yeah. That'll get you. All right, let me switch back over. I'm just going to shop around a little bit here and see what else we got going on. We're about to head into auction cross, so that's a risky biscuits time of morning. And it looks like Proc is probably going to be the top, the jockey for the day. Not a huge fan of this other stuff. Although LGVN looks like it's got some potential here, but this one it's got a super low float. Got to be super careful with this one. There's like nothing until this morning. Literally the last 10 minutes. That's the only time this had any volume. So stuff like this, it gets volume very suddenly, and then the volume disappears very suddenly. And those tend to halt a lot. And I don't want to be in that. So we'll switch back over to NDRA. Ooh, I really do like this one. I'm gonna just go ahead and erase that order just so I don't accidentally buy the wrong thing. So we'll draw some lines. And we get a nice little support trend line there. I'm going to go ahead and get an order ready on NDRA. And go ahead and set that to last price. Not entering yet. We still have another 8 seconds before we enter auction cross. Derek Phillips says, YouTube works so much better for sound. I have 70% call on QBTS right now. I need to watch closely to break 17. Good stuff. I'm going to go ahead and get into NDRA here. Now, this is super risky. So I'm going to immediately set my 6%. So 950 plus 6% is 1007. Okay. And I'm going to go ahead and create a sell order. I'm not going to be letting these run. Okay. So I'm selling all my shares at 1007. That way I get my 6%. It's a half portfolio position. So that'll put me up 3% overall for the day. Okay. Yes, it can go higher. Yes, it can fall off and go to a stop loss. That's okay. I'm only interested in getting that 3%, and then I'm out, right? We get in, we get out. That's all I care about. And then we can look at Proc again and see what's going on over there. We get nothing. All right, so at this point, I've hit my 3% target for the day. I don't need to trade more. You know, for those that have been in my streams, in my the lifetime, you know, I'm the coach in lifetime. You guys know that 3% compounds disgustingly well over 250 plus trading sessions in a year. So I could be done for the day, but as always, I like to do an extra trade for you guys on the live streams. So we'll probably do it after market open or now. It doesn't matter. Nah, I think I'm going to wait a little bit. It's got a break out of this. It's doing a little bit of weirdness here. So we'll just hang out. It still has a lot of strength though. Ooh. I think I might actually go ahead and get that ready just in case. But yeah, so, because I'm live streaming, because I'm, demonstrating proof of concept and getting you guys, exposure to extra trades that you guys can watch, from start to finish on a real small cash account. I like to take a second trade just for funsies. But if I was just trading on my own and I was a new trader and I was just nailing down that discipline and consistency, I would have been done for the day in like a minute. I'm going to go ahead and get in here if I can. That's NDRA. So let me go ahead and draw my, that's 1014 plus 6% is 1075. So I'm going to sell 100%. Sorry, my microphone's in the way. I'm like peeking all over the place. Set my sell order at 1075. And I'm going to draw this. So this is super risky. We got about 2.5 minutes till market open. So I have to make sure I'm in and out on these. Oh, you guys can't hear me? Or you couldn't hear me? Oh no, I hope you guys can hear me. All right, so we'll see. Put a 1 in the chat if you can hear me, 2 if you can't. Okay, I'm getting a bunch of 1s. All right, cool. So we hit our second target. We're in and out. We're done for the day, right? So I have used all my buying power. I took my 2 trades for the day. I am up 5.83% and I have 0 stress. Oh, the Discord had super low volume. Okay. Thanks, Derek. So Derek's over on YouTube. Let me move this over here as well. I want to make sure that my microphone is pointed at my face. Yeah, it might just be Discord. It does that sometimes. But did that mindset make sense where my job is just to get in and out? I don't have to like focus on the charts all day. I'm done with the day, right? If I wanted to be. Now I won't be taking any more trades, so I'll walk you guys through some analysis and potential setups, but I'm not taking any more trades on this account because, again, I'm up 5.8%. That's almost double my daily goal. This one still has juice, but there's no need to keep trading it. I've already achieved my goal for the day. Okay. And my setup was super simple. I just look for a break over a high, right? Super simple. Look for a break over a previous high with plenty of volume. I wait for certain patterns within the candle, and then once I see what I like, I push the button, and then I set my seller immediately at an achievable, consistent base hit target, and then I don't move it. That's the hard part, is just not moving that target and accepting, accepting the profit is good enough, because that's where most people hurt themselves. So we'll keep watching. We're going to keep looking at the market. We got about 8 seconds now for the market opens. I also want to keep an eye on Tesla and NVIDIA today, because Tesla has had a little recovery attempt yesterday, but I'm still bearish on it personally. So we'll see where it goes. But if, just for funsies, now I'm not putting this out there for you guys to trade. I'm just pointing, I want you guys to see what could happen. If you, like, my thesis is bearish, right? So if I were to look at the, let's see here. If I were to look at the sorry, I'm just trying to find a decent contract there. I think I like the 290. So if I were to look at the 290 contracts right here, I'm down to the 1 minute here, right there. Okay. So on the 290 July 11th puts on Tesla, yeah, and let me pull up the actual Tesla chart next to that. Okay, we're on the 1 minute here on Tesla, and these are puts, so we want the price to go down. If that's our thesis, right? Now, if we entered this at 363, that contract, we would need obviously to find a cut point and we would need a target. Okay. So what a lot of traders do is they just blindly grab a contract at open in the direction that they think the price is going to move. And then they don't really pay too much attention beyond that other than what drives them crazy, right? They're going to look at the red and they're going to be like, oh my God, this is stressful. If we really look at this contract, it's a 3-day out contract. This contract would already be down about 10, 12% so far. Not too terrible, but the price is blasting up to the upside so far on this candle in an attempt to do a long-term recovery. So in what I'm seeing here is that this super bullish move relative, right, is not really pushing that put contract down, which means that people are still supporting this put contract, which, isn't time to double down or anything like that. But that just tells me that there is still support for a bearish thesis. So in this case, what I would do is I would set maybe a tight stop loss around 15%. And then I would look to re-enter a contract when I see a confirmation in the candles and not so much just hold this one down into the dirt. Okay. And the reason you want to do that, or the reason I want to do that, is because, yes, it makes sense. This contract itself could very well recover for, the day and go up by a significant amount, maybe 60, 80%, maybe even higher, maybe 300%. Who knows? But we don't have to maintain all that risk if we don't want to. So if you're entering at 363, and we have a tight stop loss at 10 to 15%, at 309, right? We can always just get back in, or we can choose a healthier contract closer to the strike when we see that confirmation. So right now we don't see that. I would like to at least see a break below the low of the current candle or the low of the previous candle. So right now I'd like to see at least a low of 298.36 to make sure that the price is going down in the direction we want it to. So I'll leave this one up here. Hopefully you guys can see that with the camera in the way. Let me just check my YouTube. Okay, yeah. So you guys should be able to see that. Just to see. So like right there, we could have gotten in that put. Okay, right here down at 325. Okay, and we'll move this over here. Okay, so this would be the new entry, in my opinion. Let me erase that box as well. Okay, so this would be the opportunity, in my opinion, if we were to trade this. Now, I'm not saying to trade this, but if my thesis was bearish and if I was waiting for a confirmation, this would automatically be a healthier entry than just grabbing a put at open and then hoping you're right. Does that make sense? So it's still showing a lot of strength. So that's why I don't want you guys jumping into this stuff. But picking the right time for your contracts is important. And if you don't care about that too much, then you need to keep that risk tight if you want to not lose all your money. Okay. So I like that entry a lot better. You can still have a nice tight stop loss, 10, 15%. And you still got all that potential to the downside that you had at market open, but you're starting off up here, or I guess down here. But it's still much higher than where you were originally. Okay. So that's an important concept, and I don't want to see you guys hurt yourselves. Sorry, let me catch up on the chat. I got a bunch of ones. Good stuff. Hey, what's up, Crispy? How the hell are you, man? Seriously, how the hell are you? It's been a while. Glad you're here, man. Ethan will be watching Tesla today for sure if he's allowed to by his boss. Yeah. Yeah, as long as he does well, I think his boss will be okay. If he doesn't, then whew. What's up, Deckgun? We already took our trades today, buddy. You're good? Glad to be here? Good stuff, man. Happy to hear that. How's your 4th? Your Independence Day. And also, why don't you have the Marines roll? You were Marine, were you not? Or are? Army. Just, I don't know why I thought that. You're engineer, right? I don't remember. I'm sorry. That's right. Okay. I knew you were one of them. Boom booms. Not the boom boom. Other boom boom. All right. Good stuff, man. Yeah, I added it back. Maybe you're on another account or something like that. But I got you. All right, yeah. So what do we got here? We got NDRA may still have potential to go up. Also missed your live streams, Pookie Sleepy Pop. I'm here, buddy. I was pretty sick last week, so I apologize for that. I missed out on Thursday and Friday. But yeah, I mean this has, you know, it's got the hallmarkers. You know, it's going to go up or down, right? So even if we wanted to enter right here on 1075 on a little pullback, we just keep our stop nice and tight, and then we've got disproportionate take profit potential. It's going to go up or down, right? We don't need to try to predict. We're either going to be right or we're going to be we're either going to take a small loss or a larger profit. Okay. I just happen to get 2 wins, and I only happen to take that second trade because I'm live streaming. If I wasn't, I would just take the 1 trade. And that's basically how I work it, right? So I take 50% of my portfolio on the small cash account, and I put that 50% into a trade with a tight stop and a disproportionate 6% risk, 6% take profit. And then if I win, if that's a profitable trade, then I'm done for the day because I've hit my daily goal of 3%. And then I shouldn't be taking a second trade if I was like on my own, right? I already kind of talked about that. But I'm only taking the price action when it's going the direction I want it to go, and only when it's got volume to continue pushing it. Okay. And then if I lose the first trade, I take a small loss, then I have that second trade there, which could also be a small loss. And then that second trade is the same, right? I'm still taking the trade when the price action is going the direction it's going to make me money, when it's got good, strong volume. And I'm using another 50% for that, or 48% in that case. And then still locking a 6% take profit. And that puts me in a position where I only have 4 outcomes, right? I'm either going to be down 1% overall if I take 2 losses. I'm going to be up 2.5% if I take 1 loss, 1 win. Or I'm going to be up 3% if I just take that first win and run. Or I'm going to have 0% if I don't trade at all, right? Those are the only fixed outcomes I ever encounter by using that specific system. Now there's going to be a little, you know, a couple percentage points up and down. Like here, it's not quite 6%, it's 5.83. That's because I used a 48% buy in my second one, and because the prices go, oh, did that just halt? Because, you know, we just go up and down a little bit. Like there's going to be some variance here with the number of dollars and cents and the number of shares I can buy. You know, so you got to be very careful when it comes to what your plan is, right? You need a deliberate plan for making money in the market. And that's got to be, you know, position management is crucial. And that's what people tend to overlook. You know, they just look at the price action going up and down and they just want to make money, right? So like right here is a perfect example. All right, let me just draw this out. This is on Wolf. So that would be the entry right there. As soon as it pops over that, we got a nice super tight risk there. And a 1 to 3 risk reward just for fun, right? That's a nice clean opportunity here. And the only thing that makes it a good opportunity is the fact that the price, in theory, is going the direction that's going to make you money when it breaks over that opening candle price. Does that mean it's going to continue? Absolutely not. Does that mean that my worst case scenario is a 1.37 or 1.38% loss? Yes. Will I take 1,000 of those? Absolutely. Because the ones that go in my direction make sure I'm net profitable over a period of time, and they're more frequent. If more frequent than just deliberate, you know, like I'm not going to take 10 losses in a row in most cases because it's very statistically unlikely, and I only need to win 3 in order to become net profitable for 10 trades. This stream is sponsored by Dr. Pepper, by the way, for those who are in the stream. So Dr. Pepper CEO, you reach out to me, buddy. Death Gun says, I'm good. Going to walk my dogs and watch some tickers. Weird question. Is it risk management if I avoid a trade due to not liking my stop loss take profit? Absolutely, dude. Absolutely. I don't care if your reason is that you just aren't feeling it. That's still good risk management, because what you're doing is you're taking all the factors that your brain weighs and you're setting them aside by not trading it. So basically, I'm going to run you guys through it really quick. And I know that those who have been on my streams a lot are probably sick of hearing about it, but you are a machine. You're a little computer, right? So your brain gets information through the visual cortex, and it processes that information. You identify things like, is this a chart? Are these candles? What are these shapes and colors, right? And then we look for patterns and things like that. And that's just how our brain kind of learns, right? You see stripy legs and a tail behind a bush, your brain has to kind of try to anticipate and understand what's behind that bush, right? Because it could be a zebra, it could be a tiger, or a lion, a tiger, sorry. Lions don't have stripes, my bad. And this right here is why we keep our stop losses nice and tight, by the way, because this has potential to turn into a candle like that. So, that's how your brain kind of starts, right? That's how you just kind of perceive the outside world. And then it's got to do some comparisons, right? Because it's going to reach into the hippocampus and it's going to say, hey, hippocampus, you're my librarian. You store all the books, all my memories. What am I seeing? Like, what do I remember about this? What can I compare this to, right? And then the hippocampus is like, okay, well, here's everything I got, right? And then it also shoots it over to the amygdala, and it's like, hey, emotional guy, what kind of emotional memories do we have? Okay. And then the amygdala is like, well, here's what I got. It's either trauma or euphoria or it's apathy, right? Or it's just something unique related to that specific set of data, right, that you're seeing. And then all that information gets shoved into the ACC, which is the anterior cingulate cortex. I can't talk today. But basically what your brain does is it forms an expectation based on that information. It constructs some sort of alternate scenario, and then attempts to step into it and see if things line up, right? So in this alternate universe, if something is different, if that expectation is not met, the ACC throws a little panic signal, and it's a mess. It's just a dramatic mess. So it panics and it tells all its friends, it texts everybody, it drunk calls them, and just causes a scene, right? And that's where we get things like the fight or flight response, and we get stress, right? The brain just hates stress. Stress can be good or bad, and that's where, ironically, it's one of the best sources of humor, right, is a mismanaged expectation, right? So like malapropisms, where you take a phrase like hit the nail on the head, right? Some sort of phrase, and then you change the ending of it, and you say, oh, you hit that nail right out of the park, right? It changes it so that there's a mismanaged expectation, and then we giggle at stuff like that. It's just an automatic response. Or like magic tricks, we're entertained because of the misdirection and the missed expectation. Well, in the market, we also have a reaction to missed expectations, and usually it's trauma, right? So what that does is that creates an outcome, and that outcome usually has an emotion attached to it, and then the emotion gets stored in the hippocampus and the amygdala, and there's a whole bunch of other processes involved, but these are just kind of the higher level ones. And then the next time you see data, right, your visual cortex sends data into those pieces, and it's like, hey, hippocampus, it's me again, right? Amygdala, it's me again. What do we remember about this? And what we have is a set of trauma to reference, right? That's your library of references, is just trauma. Okay. And missed expectations. So there's hesitation, there's all kinds of panic memories, right? And what we do in that case is that creates a cycle, right? It's an escalation cycle. So if you want to be a successful trader, you have to condition yourself to be comfortable with smaller losses and with reasonable profits that you can achieve over and over and over again, and not just big profits and chasing home runs and all that good stuff, because that's where you're going to hurt yourself. Let me just peek back here at the 290s. So hopefully, I don't want to go like super far down the rabbit hole on the neuropsych stuff, but if you guys are in Lifetime and Premium, you guys get plenty of that bombardment. But you guys have to understand that you are a machine, and if you want to change the output, you have to change the input, and you have to short circuit that conversation up here, at the top of the conversation chain, and change the inputs that get sent down to the lower levels, because that's where you're going to have some complications. Let me just catch up on the chat. Patrick Garner. Wow, that's a name. Who here remembers this dinosaur? Prime Patrick. Where you been, man? Are you only resurfacing because Amazon Prime is extended for 4 days now? Let's trauma bond. I'll escalate your cycle. I wish you would. I want to remember it. I can't say too much on this stream, but It's good seeing you, man. How was your 4th? We got too many army people here. Saw my pretty face. Oh, I'm sorry, man. You want some pain and suffering? All right, let me catch up on the chat here. Ethan G629, I heart these talks. Well, that's good. I'm glad. You know, where this really cool, really complicated biological machine cyborg thing, and very few people tend to read the manual. So you don't know all the features you have, and troubleshooting can be pretty difficult. So it's important to understand this stuff on some level. You don't have to be a neuroscientist, but just kind of knowing what the parts are and how they work. You know, that we, in Chicago, when we had Traders Paradise 2025, we outlined 9 specific components and 9 specific roles that they perform. And then we had a conversation for each, you know, approach to a setup. And then, you know, it applies to stuff outside the market as well. But we applied it specifically to the market, and we did some role play, and each person was given one of those roles. And it was good. I think it opened up their eyes a little bit to kind of the importance of understanding that some of those parts of your brain are just like toxically codependent on what they're told, and it's so bad. So we can change it though. We can intercept it. Sorry, let me just catch up on the chat. You guys are all blowing it up. Patrick says, it was good, man. Let's catch up soon. Can't say the things I need to. I hear you, man. Let's do it. Yeah, we got to get you back in the Discord, dude. You're running away from us. We got to play some VR. We got to play some Arma, some Onward, some Hello Kitty. We'll do it up. Sorry. Wow, you guys are chatty. I love it. So yeah, Death Gun, back to my original point. Sorry about that. Yeah, if you are not baseline, if you're not liking anything about your trades, you can absolutely just skip it. And that is good risk management. I will praise you until the end of days for doing that. Death Gun trade placed. How do I know if a stock will pop up the day before, especially the small caps? You don't. You know, you can look for day one catalysts and stuff like that. And that's just like a news segment or some sort of headline catalyst pops out, or maybe there's a scheduled event like an earnings call or something like that. You know, that'll drive the volume and all that good stuff, but there's no guarantee that's going to move up. You know, those can just as easily move down. The only reason we see the ones that move up is because they're the ones that moved up. So you got to be very careful when it comes to trying to predict stuff. A lot of times the ones from the day before also continue, like Wolf, for example. So that's a little bit safer in a lot of cases, as long as you keep your stops nice and tight. But you got to be very careful when it comes to trying to figure out what's going to move up, because that's not our job. Our job is to find out what stocks have the lowest risk, highest potential opportunities, and then trading them as efficiently as possible. What a move on SoFi since April. Let's take a look. Yeah, SoFi. We do like SoFi. Just gonna pop that up. Yeah, that's beautiful. And that's not the first time. Like SoFi has a history of that, right? Like 1, 2, 3, 4, 5, 6, 7, 8. I mean, SoFi is really, really good for that. You know, it's super diluted too. That's interesting because it's got a billion float. How much is their outstanding? Yeah, they don't really have a whole lot outstanding either. They got 10%. That's pretty good, you know. So if they for some reason drop an offering, that shouldn't be too devastating. Sorry, guys. For a second there, no, Small PP is on YouTube. He's on YouTube. He's hiding. He hides from us. Literally 2 seconds and I hit my stop loss. So you have perfect setup. You've got a tight risk, and you exited when it was no longer going the direction you wanted it to go, and that direction that was going to make you money. I would call that a huge win. I think you're on the right track there. So good stuff, man. Beautiful. $7 of settled cash. Oh, okay. So you're walking away with some cash. I love it. Tony B, my day trading account is doing awful, but I'm doing great selling options this month. That's awesome. So let's talk about your day trading. What's going on? What is your you're in lifetime, so you can reach out to me anytime. What kind of approach are you taking there? That's something we can work on. What is this? Oh, was it a small cap? Okay, sorry. Okay, GRYP. Sorry, guys. I'm just trying to catch up on the chat here. You guys are so fast. This one doesn't have volume. It's I see the appeal here, but it's not. It's got a push, right? It's got almost 50 million float, and the volume from candle to candles, less than a quarter million, if that, right? It's very slow. So I don't think that's one that I would personally be looking for until that volume comes in, and then absolutely. But for right now, I think I'd probably just kind of hang out. Why did they always do this to us? What happened, GFed? Ashna, no, this is regular equity market and some option analysis mixed in. So right now we're kind of eyeballing the 290 puts, the Tesla 290s for July 11th. I'm not trading these. I already traded my 2 equity trades and I'm done for the day on this account. I'm leaving this up for the members. Sorry, you guys are chatty. I love it. Sleepy Pop says, also, Pookie, just want to say your trade strategy helped me somewhat. Back when I just started, I didn't set any stop loss, and INMB killed me. Well, I'm glad you're back to life. That's good. So by strategy, you're talking about the 50% position size and tight stop and fixed 6% take profit? Or is there something like a different strategy? Because I talk about a lot of different ones. I'm sorry. BBAI keeps going up. Personal vendetta against SQNS. If you have a personal vendetta, that means that the market is in your head and it's also in your wallet. So be careful. Pookies, I have a few questions and DMs. All right, let me just check those real quick. Oh, okay, cool. Percentage-wise, how much do you think it's possible to get consistently on a monthly basis, realistically, or on average? So it depends. Depends on your approach and circumstances. Personally, I think 20 to 25% on speculation is solid if you're not taking big risks and you're not losing chunks of your money. That's about what you could make in a year with dividends. So if you're not able to do the equity and speculation stuff, then I would say that dividends can achieve that much more easily. If you're trading options, obviously that number could be up much higher, and that doesn't involve naked options exclusively. You can do spreads, you can do the wheel, like Bull does his calendar press. That's a 5-minute thing every Friday, and they crush it. I've crushed it with them. I mean, it doesn't really, it just kind of depends on you, unfortunately. I can't really give a specific answer on that. How much capital is needed to get the average salary from day trading? So that is going to depend on you. Snowflake started with $50. Some traders want to start with a bunch. It's up to you. But just if you can't make money with $100, you're not going to make money with $10,000, right? So it depends on how much you want to risk and how much you think that you are comfortable risking in exchange for your potential profits. So if you figured it out, if you're able to grow $100 or $300 or something like that, then you have $2,000 and you want to scale up, and that scaling up doesn't affect you as much because you're comfortable with the numbers. Then either one, like you can grow $3,000 into $2,000 anyway, so it doesn't really matter at the end of the day. It really just depends on you as a person. So if you're not consistently profitable, I would personally keep the number small, but I can't legally tell you what to do. I would keep the number small, but don't feel like there's any limiting factors there. I know a lot of people say that, and there are fewer opportunities in some sense, but it's not a barring factor that you don't have millions of dollars. What strategies have been most successful for you? Honestly, all the ones I teach. And if you really peel back the layers there, they all focus on one thing, and that's just not losing a bunch of money. Do I ever have read months? No. I have read days, and occasionally I have a red week, but I don't have red months because I don't allow myself to go net negative on a consistent basis. So hopefully that helps. But thanks for asking those questions, and I'm more than happy to talk about them a little more in depth. But I just didn't want to ignore the chat. Setting options is the place to be. Yeah, as long as you're safe about it. Dugo, same buddy, same. I'm pulling my cash out of my small account. I'm done for a while. Okay, Dugo, that makes sense. I mean, that's also risk management. You know, that whatever is working, let it work. And then if something's not working, you can practice, refine, and realign, right? Crispy, I'm watching XYZ to the downside today based on Lee's alert. Options, but waiting for a retest at this moment in the 15-minute. All right, so let's take a look at that really quick. So what we've got here is we've got, well, I hate Weevil. XYZ. All right, so what I like to do for these, same with Tesla, same with NVIDIA, AMD, all those, is I just like to draw a box in the 15-minute, then go to the 5-minute, and then look for a candle close in that direction, up or down. And then I go to the 1 minute and I look for a retest. And then in that retest, I look for a small color change up there outside the box or just inside the box. If it goes like in the box, like halfway, then I have to wait for another candle close in the 5-minute. That's a pretty easy strategy. But, you know, there's no point in, you know, in my opinion, chasing it down here. I'd rather just wait for a pullback. But I like it. Cold swings are crazy. Yeah, cold and boil this time of year. So it's for anyone that doesn't know, those are the natural gas ETFs. There's an inverse ETF and a regular ETF. And, you know, it's a nice consistent channel here for cold. And then we still haven't gotten above the 36, like the mid 36 level. And that's personally what I'm waiting for, because once it gets up here, that's when you get those monster swings. And that's what that tells me it's time to start trading that. I don't mind the stuff down here, and it's good for little bounces and stuff. But personally, I just like it up here in the monster territory. But yeah, you could absolutely day trade these. These are pretty common. This one, LabU, LabD, a lot of the ETFs really can be traded both ways. JWAG says, start by paper trading and see how consistent you can get achieving a given percentage each day or week. Yeah, absolutely. And regardless of your profits, my big focus is on how small you can make your losses. So if you take a 1% loss every single day for 10 days, I will be proud of you. If you can do that for a year, I will be super proud of you. And if you take 10 trades that are 1% losses in a row, you're not even going to lose 10%. You lose less because of compound. SKZ swings, how do I journal my trades? How do I know where I've gone wrong? You look at the symptoms. So you have to treat this like going to a doctor, right? So there's the technical stuff related to the trade and execution, and then there's the psychological stuff. So if you're looking for, let's say, let me just grab a top runner here. Okay, let's just say that you're looking for a setup like this, right? You could say you mark down whatever ticker you want, like it's NDRA, it's trade number, blah, 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 right? And then let's say I'm waiting for a candle break over the opening price of this red candle right here. Okay, this is my setup. Just say it's a color change with low risk, okay? Now, well, it'd be over this guy. All right, so let's say we get that break over and we want to take the trade. It's got a 1 to 3 risk reward, all that good stuff. Or let's say it dips down here below this and we still enter it without moving our stop loss or anything. This would be like the trade information, like the entry, the exit, the take profit, stop loss, the position size and all that. That would be the technical portion that's related to the execution of the trade. And then whether or not it hit target, stop loss, all that good, like the data part of it goes in one side so that you can track that stuff. And then the psychology stuff goes in another one where we say, okay, well, I compromised on my stop loss. I moved my take profit up. I was feeling anxious about the trade, or I thought I saw something that, that changed later. Like if you're finding reasons to do technical analysis after you're in a trade, you are doing something wrong, right? Because that means you're not letting it play out. And that's that little dopamine seeker part of your brain that just wants resolution. So he starts to panic when he doesn't get his fix, and he wants to find other reasons to take action. So it kind of depends. It's a little bit of a process, and that's why we teach the psychology. We have coachings, stuff like that. We have Google Sheets, tools, and all that good stuff. But what's important for a starter is that you just document something. Just write something down. Get in the habit of doing that, and you'll have a better time. SKZ sings, where do you get your strategies from? Do you make them up? Are they already a thing? How do you know they have an edge? Because I use them. So some of them are just classic concepts, like, you know, not losing a bunch of money, right? That's as simple as it gets. A lot of these, you know, you can make up a strategy all day. Like, it's really not that difficult. And I don't subscribe to the belief that you have to, you know, statistically flesh out every single strategy that you trade, because it's going to be different, right? And if you really, really, really think about it, none of that actually matters when it comes to future price action, because you can test all you want. You can say, okay, well, this strategy, you know, performed at a 70% rate over 260 trades, and, you know, using these specific criteria on this specific time frame on this specific ticker, and then oops, all the participation changes in that specific ticker and that specific time frame, because maybe they had an earnings and that discouraged a lot of longer term holders, or maybe it brought in a new wave, right? You know, so you can't really rely too much on hard data like that. And I know, like, Tom Hogard, he's very hardcore and spend like years collecting data and stuff. Ultimately, what he does is he just focuses on not losing a bunch of money, right? And that's where it's at. Like, all the concepts that you guys learn as new traders is great for helping you build confidence and helping you follow rules consistently. But ultimately, you can just throw it out. Once you learn it all, you can forget it all. And you can literally just make up strategies. So, sorry, let me catch up on the chat. Do you guys view day trades on 5-minute time frame or 1 minute? That's a great question. So that's going to depend on the stock. So if, like, NDRA here, for example, has plenty of volume, so there's no gaps. There's a lot of wicks on this one, but there's no huge gaps. It doesn't look like, let me just back up here. If you're looking at a chart that looks like this, where it's all just like busted, or especially like this, where it's like Morse code, then you have to move up in time frame, because that means that there's not enough data, not enough volume. And like on this one, all the candles are kind of connected. There's a lot of good continuity between them. And if I go up to the 5 minutes, even better, right? But if I go over here to, like, let me just find one that's got crappy volume. Well, we'll just look at this. Like that, you can't read that. That's inefficient. You're not gonna be able to have a good time with that. So it really just depends on the stock. And if you view that as like looking at a, I don't know if you're older or not, but back in the day, we had to download images as we pulled up a website. And what it would happen is it would pull up like a blotchy version, a pixelated version of the picture. It was like low resolution, and then it would like do another wave of that, and then another wave of that. And it would gradually make the picture clearer, because it would get more data and fill in those pixels. It would further refine it. And that's what the time frames are. You're just looking at more resolution over that chunk of data. Okay. So let me catch up here. Crispy says, I use a combination of half-minute, or 1 to 2 minute, sorry, 5 minute and 15 minute. Yeah, that's a great way to approach it. I think it just kind of depends on the stock. Switch between 1 minute, 5 minute, rarely 15 minute. Crispy says, I am using the orb strategy for the next 30 days. I've been a strategy hopper, so trying to change that. That's beautiful, man. So, so if we were to just look at that, right, just that alone, that concept of strategy, the orb, sorry. If we look at something like Tesla, which has huge open volatility, and then the next step obviously is to look at the 5 minute for a close above or below. We didn't get that, therefore we wouldn't be looking for a trade, right? If I look at NVIDIA, I go to the 15 minute. I'm going to erase the drawings that were there from previous days. Okay, I've got my 15 minute range drawn, draw the 5 minute. There's no candle close outside the range after the 15 minute candle closed. Therefore, there would be no trade. So a day like today, where it's volatile and choppy and it's kind of range bound, we wouldn't be looking for a trade. Okay, if I look at something like PROC, let's look at PROC. Okay, it's going to be a little bit weird, right? Because it's a low float garbage stock, but nevertheless, concepts still apply. We go to the 5 minute here, and we look for this, and we never got a break below the bullish candles, so there'd be no entry on this. right? So it keeps us safe, right? Because we're not forcing stuff. And if we do take trades, that's where we keep the stops nice and tight. And then we can also apply the 1% rule and things like that. So maybe we take a 5% risk and we bring it down to 1%, or 14% risk and we bring it down to 1%. The goal for trading, in my opinion, is to just make sure the price is going the direction that's going to make you money, and making sure that when it stops doing that, you're no longer in the trade. Like, your job is to figure out when to get out of stuff. Okay? So once you figure that out, this whole thing gets a lot easier. And I'm here screaming it all day, every day, so everyone understands it. Because that's what's going to take people out of the market. It's not the profits. So let me take a look here. 56 of SQNS. I know I'm just going to blast through the chats real quick. Sorry. What do you mean by 56? What's that? You're trading with $100. Okay. What's my thoughts on smart money concepts? So smart money concepts like ICT and all that, it's all great and good as far as, like I said, just helping people build confidence and understand some system in the market. I think it's a misrepresentation of how the market actually works, because there's not, like, the narrative that's driving a lot of those concepts is just false. But it does help people understand, kind of in a cause and effect way. Like, it's a misunderstanding, but it helps them enough to kind of get some logic from the market so they can understand kind of where they participate. So I like that, but I don't like it as a Bible, if you will. So you just got to be careful. Like, everything is with a grain of salt. Like, take, for example, price movement, right? People just fundamentally misunderstand this all the time. Price does not move because there's some sort of imbalance between buyers and sellers at any given time. That is not how it works. And what actually happens here is every single order has a match, right? It's an equal and opposite match. So if there's an order here at $1.79 to buy, right? Someone has to buy those shares. Therefore, there's a sell order as well. So they're matched. Those orders in terms of price and quantity are matched by the exchange, and that's fulfilled. And then what happens is one of them has the bid, and one of them has the ask, or the price lands on the bid or the ask. And what that does is it moves the price up or down if there's enough of them to move the price, like the mid price. Okay. So if you have a buy stop order, for example, that's a buy order. Okay. That means that you're placing a buy for the price to go up, and someone else might have a limit sell order or a limit buy order even. So if you think about it, if somebody has a limit buy order and there's a buy stop order, those are both buy orders. Okay. So who's going to buy who's going to sell them their shares, right? And there also has to be a limit sell order and or a stop loss order. Those are converted to market orders, the stops. And I hate when people are kind of taught the wrong way, if that makes sense, because it's very hard to deprogram that. Like, if you look at this pivot right here, for example, this is not an area where sellers have come in and overpowered the buyers. This is simply a different type of configuration of orders. And it's just enough to prove that, we've switched from a bunch of limit orders to a bunch of market orders, or we've hit a bunch of limit sell orders that have also, met, market buy orders, for example, and it overpowers it because limit orders carry more weight when it comes to the exchange, because they want those pending orders placed, because that's how the exchange makes money. So it's because the exchange's job is to keep things liquid, right? It's not to help you guys become successful traders. It's to help you guys keep trades open, right? Because that's how they make their pay. So I don't want to go too far down the rabbit hole, but as far as smart money concepts goes, and all the other ones, right? Because there's a whole bunch of different systems like that. Like, you can look at fair value gaps, for example, right? Like this and this, it's a great opportunity there for a fair value gap. And it makes sense, right? Because you have a clean run here. It's uncontested. But what does this actually represent? It's not the absence of buyers and an overwhelming abundance of sellers. This is just a different configuration of orders. Like, you've got blocks of orders that are paired, and they're both different quality, right? All the way down this chain. And it doesn't mean that there's a disproportionate number of sellers or vice versa. Otherwise, and think about it logically. If we go back, let me just find an example here. I'm just looking for a very, just one specific item right here. Okay. You guys see this little dash right here? There's no wick. It's just one specific price point. And if you look at the OHLC, all those price points are exactly the same. But somehow there's 2,328 volume. That alone disproves smart money concepts and ICT concepts. Just on a fundamental, here should never exist. This candle here should never exist. So it's just one of those things, like, yes, it helps new traders understand stuff a little bit better. It's great, but I don't like it personally, because it just gives you the wrong foundation, if that makes sense. Actually, they're at an advantage. It's not, if not, what's the point of learning something more complicated? That just boils back to the same thing. You know, you're giving yourself more to do, and our brains are naturally conditioned outside the market to believe that more effort leads to more compensation. In the market, it's completely backwards. I've demonstrated this on streams many, many times. If you guys just pick a random ticker and a random date and a random price point, we can trade it net profitably. Just with a line. We don't need anything fancy. Could literally just draw a line and just keep a tight stop loss. A tight stop loss will outperform any other strategy at the end of the day. Like, that's really what it boils down to. Oh, 56 shares of SQNS. Good stuff. Can I explain futures? I don't understand it. Yeah, so futures is a separate type of instrument. They're similar to options contracts, but you're trading commodities. Like, you're trading against corn, you're trading against oil, cattle, pigs, eggs, copper, precious metals, things like that. And because they're commodities, those contracts don't have expiration. I'm sorry, they do have expiration. They don't have theta, so there's no time decay in those contracts. But you also do risk assignment. So if you're on a broker that actually assigns you what your contract represents, you can end up with 1,000 pigs, and then you'd have to make sure that you have things in place for storage and transfer and offloading those pigs and stuff like that. So if you're not in like agriculture, for example, you're going to want to be very careful. But assigning is very rare and stuff, but that is a real risk. So be careful if you get into that stuff. Most people just trade the speculation on the contracts. And in that case, it's a lot like options, but without the theta. So I personally would encourage everyone to just learn stocks first, because it's very clear. You get a company which makes money, ideally. They exist in the real world. It's something that's very tangible. It's got a very specific hierarchy and specific people involved. It has specific laws that they have to follow. They have to fulfill certain obligations to remain listed on the exchange. They're transparent. You can see everything, whether it's for good or for worse. And then the company uplists. It offers shares of its company to shareholders, and then you can trade that, which also has a very defined structure. So I personally encourage everyone to look at stocks first, just to learn how the speculation and the laws of supply and demand, how they kind of work. And then you can kind of build up into layers of abstraction and alternate markets and things like that. So it's up to you, but stock market seems to be a lot easier for most people. You ended up with 100 goats. Oh no. You got to sell them to the satanic temple. Ooh, look at that one. So Proc just has a little juice today. Like E-mini, S&P, and NASDAQ, that's just contracts. So E-minis is future, yes, but the NASDAQ, the word NASDAQ can apply to a couple different things. You gotta stop harvesting goats, guys. All right, looks like Proc halted. Cool beans. All right. I do have to jump off here pretty soon, but I just want to point out that this is my bread and butter right here. Death Gun is also watching, I'm sure. This is exactly the kind of stuff that we like. This is our juice. This is our daily bread. Are you in here, Death Gun? SKZ swings, so I can just put a random line on the graph and set up a 1 to 3 risk reward and be profitable. I mean, I've done it, but there's a couple things that you need to also pay attention to, and that is to make sure that like you're putting your entry when the price crosses above that threshold, and you have to be consistently disciplined. And even like there's no guarantee, right? But let's just do it. Somebody give me a random ticker. I love this little parlor trick. It's awesome. Someone give me a random ticker. XOM. All right. I'm taking first come, first serve today. Somebody give me a number from, let's see. I don't know. Just give me like a number from, I don't know, 90 to 110. I want it somewhere near the thing. 100? Okay. So let me erase anything I might already have drawn, and I'll draw it, and we'll put it right at 100. Okay. And then what's 1% from 100? It's 99, right? Let me just color this. Okay. 99. 99. All right. So that's going to be our stop loss. And then 103 is going to be our take profit. Okay. We'll test it in real time. Somebody give me a date. Hopefully somewhat recently. Chris, yeah, Dan, we did it in the room in Chicago. It's funny. March 13th, 2023 or 2025, sorry, or 2024. 2024. Okay, so we're going to March 13th, 2024. You guys pick the ticker. You guys pick the price point. I pick the ratio. What do we say? March 13th, 2024. All right. So criteria number 1, price needs to be going above $100. Okay. So this is the date we start. So let's just go through and we'll just walk through this one group of candles at a time, right? So far we're above the level, therefore no trade, no entry. We'll just zoom out a little bit so it's a little faster. Price just kind of going up today. I'm sorry if I miss anything in the chat. It's just because I'm trying to scroll as fast as I can here. We might have to move that level up a little bit. I think we started a little too high or too low. All right. Yeah, I think we're already back in October. So yeah, let me just zoom out. We might have to just move that number here. We never got back down to entry. Oh, here we go. I was going to say, if that's the case, we just manage our risk really well. No trades. All right. So at some point, okay, this candle opened here. It's hard to see with the volume thing. Sorry about that. Let me just move this up. So this candle opened here, pushed down here, and then back up to here. But first it went up to here. So we don't know which way this was, and it's very tempting for a lot of people to want to count this as a win when they backtest, but I'm going to count it as a loss. Just for funsy onesie. Now, we do also have to include a win, right? Because at some point it did open here, and it did move up to here, and then it closed back down here. So this is kind of both. So it's a win and a loss. So I'm going to make that a yellow line. Does that make sense? And does anybody contest that? Like I want to automatically include the loss just because it opened here and went down here. So it may have gone up and then come back down. But at some point it did open here and go up to here. So it's also a win. So if we're taking 2 trades a day, this one kind of counts. Is everybody cool with that? It's logic, sir. All right. So we'll move on. And then this one here, right? This candle opened here, came down to here, and then came back up, and then pushed back down. Sorry, it closed here. So it doesn't look like it closed above here. I can't really confirm that there was an entry on this. Does anybody have any challenge with that? All right, moving on. So this one here, same thing. Basically, it opened here. When I think we can pretty easily call this a win. And you know what? Just for chaos, let's call this a loss. We'll just add a loss in there. Okay. We're going to be brutal with this back test. Okay. So this one here opened here, came down here, blah, blah, blah. Let's call it a loss. All right. I'm just putting all the losses in. This one here, let's see, what is that? 102.98, 103. So this one wouldn't have hit, so that would have been a loss, I assume. Well, see, I don't know. It would have been an entry, but then this one hit the target. So let's move this up here and call it a win. And then let's see, did we get back to our entry? All right, now. All right, so we got some kind of mixed results, right? And this is pretty common. I think. Does anybody dispute any of these candles? We have basically 3 losses, 3 wins, effectively. We can make it 4 losses. I don't care. You guys want to do that? Let's do that. Let's call this one a loss. All right, 4 losses, 2 wins, okay? So now, let me open up my notepad. Handy dandy notepad. Okay. So we have, as far as a barcode goes, we've got loss, oh, sorry, it'd be 3 losses, 2 wins. So loss, loss, win, loss, win. Loss, loss, win, loss, win. Okay. And we used a 1 to 3 ratio. And let's say we start with $1,000. Oops, $1,000, right? Everybody so far so good? So if we start with $1,000 and we minus 1%, and then we minus 1%, and then we add 3%, and then we minus 1%, and then we add 3%, we end up with 1,029.39. Okay, so we are up 2.39% after 5 trades. Okay, does anybody dispute that? Or any of those trades, given the fact that we added like 2 extra losses in? Just slap a 1 in the chat if that makes sense, and a 2 in the chat if that is somehow deceiving or fraudulent or just doesn't make sense. And remember, you guys pick the ticker. You guys pick the date. Getting a couple of 1s. All right, I like it. So, so it is provable that you could, in theory, choose a random line, and position management and risk management kind of supersedes any technical analysis within an extent, right? And this price action is probably the worst you could encounter, where it's just kind of choppy, right? If you did this in like a more directional market like this, and you had a level like up here somewhere, with the target obviously up here somewhere, you might have a loss, you might have 2, you might have 3, and then, clean win, clean win, clean win. Like you'll have, a much better time in a more directional market than you will when it's like you guys picked literally the clusteriest part. It's that's kind of rough there. And we still somehow managed to pull off a profit, net profit after 5 trades. Now you got 5 more trades, right? Because we like to look at them in sets of 10. Death Gun says, I've had a few 2.9% days, but still nothing increasing. False, I'm net positive. That's good stuff, man. That's good stuff. So, yesterday and today, for example, I made 5.9%, or sorry, 5.8% today, and I made, Monday, right? Yesterday morning, I started at 190 or 199.11, I think, on this account, and we're up to 224. So what's that number there? 224.35 minus 199.11. 11. So I'm up 12.68% on this account in 2 days. I'm okay with that. It's not millions of percentages, and it's not going to buy me a Bugatti like today, but it adds up, it compounds very nicely, and I don't have to work too hard for it, because I've spent maybe a total of 5 minutes in trades over the last 2 days, if that, and it's all been on live stream. So I'm doing this all right in front of you guys. So I don't want you guys to blindly subscribe to any strategy, whether it's mine or someone else's, because it's really not where your focus should be. Your focus should be on what causes you to deviate from that trading plan, and specifically, what steps you can put in place to mitigate yourself from your own damage, right? Because that's what matters the most. Like Death Gun, right? Brand new trader. It took what, like 2 days conversation, maybe, like actually focused conversation, where we were able to figure out some of the obstacles and just shake it out. And then you put in some practice. You went out and found some examples, and we looked at them, and then you're crushing it, dude. You're net positive, which is something that 90% of traders can't figure out how to do. You know, so I think there's a lot of value in that. You know, it's a skill set no one can take away from you at this point. Your life has changed now. Even if it seems silly, even if you're only making $3 a day, right? Percentage wise, it's a beautiful thing. Look at that, proc. So just for funsies, I do have to jump off here pretty soon though, by the way. Does anybody have any questions before I go? We'll do that, we'll do that. And then this guy just never got a retest. Sad, thank you for your time. I'm glad you were able to be here, man. We all miss you. Glad you had a good fourth. Back and better? All right, man. That's beautiful. And thank you again for reaching out, dude. Seriously, in Chicago. That's big stuff. So thanks. And I'm around too. I'll be around in the Discord all day. I have a bunch of meetings and stuff, but I'll be here. Yeah, Kenny's here, Fergie's here. All your friends are here. Fergie, my wins have been far more consistent trading equities than naked options. The more I trade equities, the less I want to trade naked options. I'm finished for the day and have a few acres to mow. Thanks, Pookie. Well, you have fun out there. Make sure you stay hydrated. Don't get rhabdo. This heat is deceptive and dangerous, so be careful. I don't quite remember what part of the country you're in, but I know up here in New York, it sucks. So be careful. And I'm glad to hear that. You know, naked options, you will probably develop a strong distaste for, and risk in general at some point. And then on the other side of that, yes, you can ease back into them later on. But for right now, if they're too bitter and it's just not working, it makes sense. Then maybe just don't put it in the mix for a while. You know, so I'm happy to hear that. I know you and I trade SPX once in a while, and we tend to get different overall results. And I don't like seeing you do that to yourself. So we can work on that today by just not trading it today. So good stuff. Thanks, Pookie. Had 2 red trades today, down 1.43%. Gonna go salt, sir. That is incredible risk management. How many percents would that be for a regular new trader? And how many more trades would they be trying to put in to try to make it all back? So I'm proud of you. But yeah, we can chat. We'll talk. But understand that objectively, that's a really good number for a red day. Sorry, let me just. Are we still mic'd up? I don't hear anything. You might have to refresh your Discord. Sorry, I know Discord likes to also just mess with the audio. Sorry about that, guys. Texas next door to Hades. Yeah, that's rough. Definitely make sure you're hydrated. Yeah, it is. It's weird up here, Tammy. It's stupid. You're focusing on swings more than day trades. Good stuff. Ooh, okay. Second one is a revenge trade. Yeah, let's talk about that. I'll meet you over in the free chat, buddy. We'll chat about that and figure out what caused that. It was yours. Okay. All right, good stuff. All right, let me end the recording. I'll hang out with you guys here in the Discord for a little bit, and then I got to jump off. Patrick, we got to get you in the Discord, man. Don't be a stranger. So thanks all who are watching the live stream on social media, and we'll catch you guys Thursday.